All right, welcome to The Explainer. Today, we've got a wild one for you. We're diving into a corporate filing from BitMind Immersion Technologies, you probably know them as BMNR, that's got everybody talking.
So what's the big deal? Well, the company just filed to authorize, get this, 50 billion shares. That's billion with a B. A number that massive, it's almost hard to wrap your head around. And it immediately raises a huge red flag for investors.
And that red flag is, of course, the fear of catastrophic dilution, right? I mean, is BMNR just getting ready to dump an insane amount of new stock onto the market and completely tank the value for everyone holding it right now?
But what if that's not the story at all? What if this isn't a desperate move, but actually the first step in a master plan to send the stock rocketing to $100 a share? Because that's exactly what the analysis we're digging into today suggests. It's not a sign of distress, it's the opposite. It's the groundwork for something huge.
All right, so let's get into it. To really understand what's going on here, we have to start with a really important distinction. This is key to the whole argument.
And that distinction is between authorizing shares and actually issuing them. They are not the same thing. Think of it this way. Authorization is like getting the permits and building a massive empty warehouse. You've created the space, the potential. Issuance, on the other hand, is when you actually start filling that warehouse with products and selling them to the public. So what BMNR has done here is just build the warehouse. It's huge, yeah, but it's still empty for now.
So the argument goes, you shouldn't see this as a lifeline for a struggling company. Instead, think of it more like a massive fuel tank. This move is all about preparation. It's a signal of just how confident management is that they're about to go on an epic journey, and they want to make damn sure they have more than enough fuel to get there.
Okay, but that still leaves the big question, right? How could creating more shares ever be a good thing for the people who already own them? Well, that brings us to the absolute core of this strategy, something the analysis calls the accretion engine.
You see, not all dilution is created equal. There's bad dilution. That's when a company is desperate for cash and sells stock for cheap just to keep the lights on. That crushes value. But then there's what this source calls good dilution, or accretion. This is the opposite. This is when you sell your stock at a premium price, and then you use that money to buy up valuable assets. And when you do it right, it actually makes every single share you already own more valuable, not less.
Now, this whole engine, this whole idea, it only works, and this is absolutely critical, if one condition is met. The stock price has to be trading for more than its net asset value, or NAV. For a company like BMNR, the NAV is pretty simple to figure out. It's basically the total value of all the Ethereum they've got sitting in their treasury. That gap between the stock price and the asset value, that premium, that's the magic ingredient.
So here's how they put that magic ingredient to work. It's a simple but brilliant process. Step 1, they issue a few new shares at that high premium price. Step 2, they pocket the cash from that sale. And then, Step 3, they immediately turn around and use that cash to buy Ethereum on the open market at its real price. See what's happening? They're selling paper for, say, $50 that's only backed by $40 of ETH, and then using that extra $10 to buy more ETH. It's like an arbitrage on their own stock.
And the result is just kind of mind-bending. Even though there are now more shares in existence, the amount of Ethereum backing up every single share actually goes up. It's incredible. They're basically using the market's own excitement and momentum as a tool to vacuum up more and more of the real asset, making the whole pie bigger for everyone.
Okay, so that's the mechanics of the engine. But the financial engineering, as clever as it is really only half the story. The other half is all about psychology. And specifically, it's designed to deal with something called the retail barrier. You've probably felt this yourself. It's that psychological wall a lot of us hit when a stock gets into the triple digits. A stock at, say, $150 just feels expensive. It feels like you've already missed the big run-up.
But a stock at $20? That feels totally different. It feels cheap, it feels accessible, you feel like you can buy a whole bunch of shares, and that it has way more room to grow. It's totally irrational, we know it is, but it's a powerful psychological pull. And this entire strategy is built to weaponize that feeling. So the ultimate goal here is to create what's called a perpetual momentum cycle. And this is where that insane 50 billion share authorization comes back into play. That massive number gives them the ammunition to do stock splits again and again and again. Every time the price starts to get too high, they can just split it, bring the price back down to that psychologically appealing zone, and keep the momentum going.
Now, I know what you might be thinking. This sounds, I don't know, a little bit like a crazy untested theory. But the thing is, it's not. It's actually a playbook that some very, very successful companies have used before.
Yeah, BMNR is basically taking a page right out of the MicroStrategy playbook, or even Tesla's. Think about it. You accumulate a core asset. For MicroStrategy, it's Bitcoin. For BMNR, it's Ethereum. You get the market excited so your stock trades at a premium to those assets. And then you use stock splits to keep the share price in that sweet spot for retail investors. It's a proven roadmap to success.
So, okay, let's put all these pieces together. How does this look as a long-term plan? Well, the analysis we're looking at has a pretty cool name for it. The Forever Runway Plan.
It breaks down into 3 distinct phases. Phase 1 is the explosion. This is where a big crypto bull run combined with that accretion engine we talked about drives the stock price right up to that $100 retail barrier. Then, bam, phase 2, the split. Management pulls the trigger on a big split, like a 5-for-1, which instantly resets the price back down to a tasty $20. And that kicks off phase 3, the Forever Runway. With literally billions of authorized shares in their back pocket, they can just repeat the cycle over and over again for years to come.
And check this out. They're not just dreaming about this for some far-off future. The effective date for this whole thing is set for January 2026. The thinking here is that they are methodically setting the table right now to be perfectly positioned for the next big crypto bull cycle. So when you look at it this way, the filing isn't a sign of weakness at all. It's an incredibly aggressive signal of just how massive their ambitions are. The source material puts it perfectly. This isn't a warning, it's a flex. It's management using a boring legal document to tell the world they expect their stock to become so valuable, so fast, that they need a practically infinite number of shares just to manage the explosion. Of course, the billion-dollar question remains, will this incredible engine actually fire up?